Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance and talk about how a company really is doing versus what they want you to think. Today we are diving into Triller Incorporated's latest financial report, also known as a 10Q filing. If you love digging into the nitty-gritty of what makes a company tick, or maybe what makes it stumble, stick around. And hey, before we dive in, if you love getting the unvarnished truth from these filings, make sure you are subscribed and hit that notification bell. We also have a fantastic Discord community linked in the description below where we break down these reports together, so come join the conversation. Alright, so this isn't just any old report, it is an amended report, meaning they found some mistakes in the first one and had to fix them. That immediately tells us something is up. It is for the period ending the 31st of March 2025, and it is a big reminder that companies aren't always perfect. Let's jump straight into the financial health of Triller Incorporated. Take a look at their balance sheet. As of the 31st of March 2025, they had $45.4 million in total assets. That sounds like a lot, right? But when you look at their liabilities, things get a little dicey. They owe a staggering $12.8 million, making their total liabilities and stockholders' deficit balloon to $45.4 million. This means they owe way more than they actually own. Specifically, their accumulated deficit, which is basically the total losses since the company began, is over $1.2 billion. That is a massive hole to climb out of. Now let's look at how much money they actually made or lost over the 3 months ending the 31st of March 2025. Their total revenues were $4.7 million. That might sound okay, but when you see their total operating expenses, they came in at a whopping $48.9 million. That is a difference of nearly $44 million lost, just in these 3 months. And if we look at the same period in 2024, they lost $8 million. So they are losing money much faster now. Their net loss for this quarter alone was over $53 million. That is a huge amount of red ink. Here is a key point though, their revenue is really coming from their financial services division. The social media and sports streaming parts aren't bringing in any money right now. This is a bit concerning because that social media aspect is supposed to be their big draw. And remember that $45.4 million in assets we talked about earlier. A big chunk of that is long-term investments at $27.1 million, but their cash and cash equivalents only totals $2.1 million. That is not a lot of wiggle room to cover daily expenses. Triller Incorporated is trying to do a lot of things. They have an AI-powered technology platform for creators and brands, and they also run a wealth and health platform in Hong Kong. That is a lot of different businesses to manage, and managing multiple complex businesses can spread resources thin. This section is super important and frankly a bit alarming. The report explicitly states that the company has substantial doubt about the ability to continue as a going concern. This means they are not sure if they can stay in business for the next year. They've missed several loan payments and are in default on some of their debts. This is a major red flag for investors. Let's look at how much money customers owe them. They have $1.1 million in accounts receivable net. That sounds reasonable, but here is the kicker. They wrote off $3.3 million of old debts that they just gave up collecting on. This suggests they might have issues collecting money from customers. This is where things get really expensive. They have $11.4 million in short-term loans and another $41.4 million in short-term loans from related parties, meaning people or companies connected to Triller, plus they have $53 million in convertible debt. That is a massive amount of debt that needs to be paid back with interest. They've got convertible debt from Total Formation Incorporated and Giant Wisdom Ventures Limited. One debt alone is over $46 million, and they completely miss payments on this, putting them in default. The interest rates on these notes are high, making it even harder to pay them back. They've issued a lot of warrants which are basically options to buy company stock. There are millions of these outstanding. This could lead to a lot of new shares being issued in the future, which dilutes the value of existing shares. This is a long list of lawsuits and potential problems. They are being sued by music companies for millions of dollars for copyright infringement. There are claims of breach of contract misrepresentation and even a default judgment for $4.4 million. They also have a huge $30 million liability for unpaid music licenses. And on top of all that, they are involved in a lawsuit with Yatu PN, Limited, potentially owing them $38.1 million. This is a lot of legal trouble that could cost them a fortune. Let's dive a bit deeper into these legal issues. For instance, the Sony Music Entertainment case resulted in a judgment of $3.6 million, and Triller missed payments, failing to comply with the court order. Then there is the Fox Plaza lease dispute, where the plaintiff is seeking over $3.5 million. It is clear Triller has significant legal liabilities piling up. The company admits it's facing a delisting determination from Nasdaq stock market for failing to file its reports on time. This is a huge problem because it means their stock might be removed from the exchange. They also mention they have substantial doubt that we will continue as a going concern. This language directly tells you they are struggling. This is blunt. As of this filing, Triller Incorporated has defaulted on approximately $70.8 million of outstanding debts. The total amount they owe that is past due is around $76.4 million. This is a critical number and shows a severe liquidity crisis. Now let's wrap this up with my take. Triller Incorporated is in a very precarious financial situation. Their revenue is declining, their expenses are soaring, and they have a mountains of debt and legal liabilities. The fact that they are acknowledging substantial doubt about their ability to continue as a going concern and are facing delisting from Nasdaq are critical warning signs. They are trying to manage multiple businesses, social media, financial services, and even healthcare, but the financial bleed is immense. The 37.55% drop in revenue for their financial services segment in just 1 year is significant. The massive increase in operating expenses, particularly personnel and legal fees, points to a company trying to keep up but failing to generate enough income. The story here is a company that has taken on a lot of debt and faces immense legal challenges. While they have some interesting ventures like their AI platform and financial services in Hong Kong, the sheer weight of their losses and legal battles is overwhelming. They are burning through cash at an alarming rate, and there is no clear path to profitability in sight. Their cash balance is very low and their liabilities are astronomical. It would take a miracle or significant new investment with a very strong plan to turn this ship around. Frankly, based on these numbers, it looks like a very high-risk situation for any investor. Alright, that is our deep dive into Triller Incorporated's latest filing. What do you think of these numbers and the company's future prospects? Let me know in the comments below. If you found this analysis helpful, please give this video a thumbs up and subscribe for more unfiltered corporate insights. And again, don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we will see you on the next episode of Corporate Decoder.